All right, let's get straight into it. As an ICT trader, this is my weekly thesis for the MNQ and NQ futures. Here's exactly what I'm looking at for the week of April 13th, 2026.
Okay, listen up. This is your briefing. We are walking into a really high-stakes environment this week. You've got a major battle playing out, and you absolutely need to understand the two sides of this fight if you're going to navigate it properly.
In this week's battlefield, it's a classic. It's the macro picture versus the immediate market structure. You know, they're telling two completely different stories right now. Our job is to figure out which one is going to win out.
So here's the core conflict, the real tug-of-war. On one side, you have the big money, the interbank price delivery algorithm, and its flow is bearish. The big picture trend is pointing down. But on the other side, you've got last week's price action, which was just aggressively bullish. It created a clear short-term upward momentum. So what we have is a classic fight, long-term bearish flow against the short-term bullish strength.
So how do we figure out who's going to win this fight? Well, you have to zoom out. You have to look at the bigger picture. And right now, that means understanding the quarterly manipulation phase we're stuck in.
And before we go any further, you got to know what IPDA is. Think of it as the market's internal GPS. It's the logic, the algorithm that the big banks use to move price from one pocket of liquidity to the next. It is not random, it is completely engineered. And right now, that compass is pointing south.
And that brings us here. We are deep inside the Q2 manipulation phase. What does that mean for you? It means you should expect choppy, confusing price action. These moves, they aren't random. They are specifically designed to trap retail traders, to get you on the wrong side of the market before the real move kicks off.
So let's just summarize the conditions on the battlefield. IPDA is bearish, period. However, we're trading above the quarterly open, which is a sign of strength. And last week, we saw that aggressive sweep of sell-side stops, which gave us this short-term bullish bias. See? It's a mixed bag, which is pretty much textbook for a manipulation phase.
So with all of that context, how does this build into a weekly thesis? Let's talk about the primary draw on liquidity, where I believe the algorithm is actually trying to take price this week.
Given this whole conflict between the macro and the short-term structure, where's the most logical place for price to go? You know, where is the real draw on liquidity?
Here it is. My central thesis is a move down into that sell-side liquidity cluster between 24,914 and 25,000. So why there? Because this is the logical point where the bearish macro flow smacks right into the bullish short-term structure. It's a natural reaction point. I'm expecting this to kick off on Tuesday, right after the PPI data gives us the volatility we need. And the how will likely be a fast retest of that big psychological 25,000 level.
And just to be crystal clear, sell-side liquidity, or SSL, that's just a fancy term for all the stop-loss orders from buyers that are just sitting there below the current market price. To the algorithm, that's fuel, and price is drawn to it like a magnet.
So to put it as simply as I can, I believe the IPDA, the algorithm, is engineering a move to run those stops and reprice the market into that specific pool of liquidity between 24,914 and 25,000. That's the whole thesis.
Now look, a thesis is pretty useless without an actual plan to execute on it. So let's break down how to approach the week, day by day, and the critical levels you need to have marked on your charts.
First things first, the catalysts. Honestly, everything this week hinges on one single event, the PPI data on Tuesday morning at 8:30 Eastern. This is a high-impact release. It's going to inject a ton of volatility, and it will almost certainly set the tone for the rest of the week. The other data points, they're secondary. Tuesday is the main event.
These right here are the key numbers on our map for the week. Our primary target is that unswept support zone down to 249.14. Now, if we rally first, those equal highs at 25,195, that's the key resistance to watch. And you can think of last week's high and low as the initial sandbox we'll be playing in.
So here's your playbook. Monday is for observation. That's it. We sit on our hands and we wait. Tuesday is all about reacting to the volatility from that PPI data. Then Wednesday and Thursday, we're just looking for follow-through. Is it a continuation or is it a reversal of Tuesday's move? By Friday, we should have a clear trend, and that allows us to start targeting the next major liquidity pool. And finally, and this is without a doubt the most important part of any trading plan, we have to define the exact point where this entire thesis is wrong. We need a clear line in the sand. You have to ask yourself this question every single time. At what point do you just abandon the idea and reevaluate? If you don't have an answer to that, you don't have a plan. You have a prayer.
See, a plan without an invalidation point is just hope. It's gambling.
My invalidation for this thesis isn't subjective, it's not a feeling, it's a specific price level on the chart.
And here it is, 24.91.4. That's the previous week's low, and it's the bottom of our target zone. A decisive break and close below this level completely invalidates the short-term bullish argument. If that happens, the thesis is wrong. It is that simple, no questions asked.
So the thesis is laid out, the key levels are defined, and our invalidation point is crystal clear.